So I'm looking at the trading today, and I just wanted to share what I was looking at, and I feel like it's worth sharing because I took a couple of trades on NVIDIA, and initially the market opened, and it looked like it wanted to reject, and so I thought, let's go short. So my first trade here at 1 minute after the market opened, I was in it for 30 seconds. I shorted it at 169.51 and covered it at 169.36. So I made um, about 15 cents in profit. Is that the right amount? 36.46. Yeah. So um But while I made that 15 cents, I mean, it was really kind of it opened here and I got short around here. Okay. And this is the 1 minute chart. There's no apparently there's a 30-second chart, not on Thinkorswim, but um so like I mentioned before, this particular account I don't have funded. I'm considering funding it. Um the technology that I use over here, this is connected to my funded account, and you can see that it's basically showing you in real time what the price is and how many contracts are going through, and so is this. This seems to move a lot faster. And previously, I read a book that talked about, sometimes speed isn't your friend, but from what I understand, um, interactive brokers and DOS have the fastest executions. So um, basically, what this is doing is, here's my chart on Thinkorswim. It's 168.71, and here's the real time price over here, and it looks like it's maybe a little faster, where it's 177, now it's 77, and then it's 75.6, 56. It's a little lagged, even though this is real time. Um, But while this was dropping from 150 from 51 down to 36, it didn't just go from 51 to 36, even though this red candle is telling you it opened here, had a low here and it closed here. It went from 51 up to here and then back down. So I only traded 30 shares. So, at the peak, I was down maybe $3. But in my head, I thought, if it just takes a run up, I better be careful because I could be down, a whole lot, in a short amount of time. And a whole lot for 30 shares would be like maybe 14, $15. Now, if you're trading 3,000 shares, that's like 14, 1,500. So anyway, I got out once I noticed I had some profit and I just booked the profit. That's been my strategy lately. And I sort of just came up with that on my own while I was trading and just watching how fast the price moves, watching my setups and my signals. And this is a relatively new setup and signal for me. Um, and maybe this wasn't even the right play on it, but usually, like, if it tries to break up and it rejects on this upper VWAP, then that can be a pretty good short. Well, I just captured the profit when I had it, when I used to trade futures when I was 21, 22 in college. What I would notice quite often is if I had a really good signal I was almost always right, but I would take myself out, before it would start to work. And I'll talk about that later. But the other thing was if I was right and it moved right away, if I didn't take the profits, they disappeared. So I just started to take profits. Now, my next trade was at 935, 934, and I bought at 169.91. So here's 934. I bought at 169.91, and I thought that, well, my other rule is, if it's gonna establish a move up, then I'll just take the move up on the moving average. Well, it went up to 97. It actually broke 170, but it went up to 97, and I said, you know what, I'm just going to get out. So I actually bought it right around where it opened and sold it right around where it closed. I didn't deal with this pullback here. I think the pullback happened after it went up. I think it opened here, went up, went down, and then closed is what happened. But, actually looking at that, you just, all you see is the info from that. You don't see what actually played out in real time. So that's what happened, and so I captured another couple dollars in profit. And what I want to talk about is the psychology of it, because when you're trading fake money, there's really no risk involved. If you've ever played poker and you've played poker with fake money, sometimes like you just deviate from your system and it doesn't matter. But I've done this a few times. Sometimes it works out to my benefit, but I fully intended on trading real money today. And you notice the $9 that I have in profit is in my margin account, my demo account. I thought I was in my real money account. So I really treated every little move like it was real money. I mean, I really thought I was trading for real. And you can see how quick the moves are. So this is a good trade book here. I've got one, two, three trades, six total tickets. So if I was subject to pattern day trading, that'd be it. But I, the last trade was 169.76. I bought and I sold at 169.85, and that was a minute later. So I actually got in on this down bar. It opened here and it closed here, but within that range, at one point, it went from 76 up. So uh, I was betting on a bigger move up, but I don't know, you just don't know. And so, when I got in and I had some profit, I just took it and it worked. Now, the move I want to talk about is this. This is definitely in my trade book. This would be like my absolute A plus setup. The reason I didn't take it is because I had already booked $9 in profit, and that's on a very small account. So I've tried to block out my account, but like I'm trading 30 shares. So 30 shares at 168 is like, just over 3,000 bucks, I think. And so like $9 I'm cool with. That's all I'm hoping for. That's more than I'm hoping for. So 30 shares and it's $168. Let's say zero point 0.7. 5,000 bucks. It's not very exciting. It's also really not very exciting. So 0.001. So I made 0.18 of point like one fifth of 1% just about. fine. I'm okay with that. I mean, if you want to have like a really good day, maybe like zero point 0.5 is good. 0.005 or zero point zero 0.01, like 1%. Anyway, um, I thought I was trading real money, so I was really respecting it. And so when I saw this move here, where now it really did reject the VWAP, not only did it reject the VWAP, it had tried to establish a breakup that didn't work. And then it tried to establish a trend that didn't work. And this right here, you have two tall wicks, both at the same level. That's, a double top or a tweezer top when you're looking at candles. That's a very strong signal, especially right after the opening range break. So that's definitely something that's like in my trade book that when that happens, I expect that. And I took a picture of this chart right around here, and on the picture I wrote, I think it's going to drop. So let me show you where I took that picture. And this will be in my trade book. Um, this is 840, so 940. So NVIDIA riding the moving average long. NVIDIA turnaround. What's this image? So this is where I thought, hey, it looks like it wants to go up. It's riding the moving average. It did establish that up move that I thought it was going to. I didn't chase it. I had already booked my profits. All right. So then a few minutes later, I saw this and I went, wow, that's going to sell off. This looks to me like it's going to sell off. So had I not already made what I wanted to make, I would have taken this short. And the thing that I'm doing is I'm also just trying to look at like, what's the level two look like in Thinkorswim? There's real advantages to interactive brokers because, they pay you 5% on idle cash. So if I leave my money in there, that's a good return. But I am trying to explore whether, maybe Thinkorswim's a reasonable option to look at. The option, if I wanted to buy a put option, was $1.25. So if I bought that put option that expires on Friday of this week, it would be $125. So every penny that the option moves would be $1 in profit. Now, you could lose your butt real quick. Right now, I'm looking at like, my max daily loss is like $36. Like I really don't want to lose much. So 36 bucks, fine. So let's see what happened with this. It tanked, right? It went way down. Um, so I just tried to document it a little bit. 945, there's that move. So had I gotten in, I probably would have taken profits there because it established the move. I don't know what it's going to do on the moving average, but on the 1 minute chart, it looks like a real nice signal. And this is the type of move that, I want to start to document as like a rollover. You've got this tweezer top, you've got this kind of hanging man candle. It's rejecting the VWAP right up near the upper cam point, and then the price is rolling over. To me, that looks really good. And I haven't even started to even look at these technicals. I'm just looking at the price. And so already that option's up from 25 to 41. So that's 16 cents. So that'd be $16 in profit at that point. And, the thing is, you really just don't know. Like, where it's going to go. But I think that you can probably start to try to figure it out. And so you can just see, this option just keeps increasing in value as the price drops. And so, if you had gotten short initially, I think it was 169.85. Now it's 169.01. So that's like 84 cents in profit times 30 shares, 25 bucks in profit. But how much do I have on the table? I have 5,000 bucks on the table. With the option, I have $125 on the table and I'm profiting the same amount. So you see where the option is like real advantageous as far as your capital goes. But it's also not subject to the pattern day trading rule. But that being said, this is where it really got interesting. I mean, it really moved. So my thinking is, when you take this initial trade, you want to have some sort of stop, at least if not in your head, um, in DOS you can program in stops. So you can say like when I enter a trade, if it goes against me, I'm not going to risk more than whatever. And you can put, like for me, I have 0.5% of my amount that I'm risking overall. So you could do that, or you could, make it a hotkey to say, place a stop above the upper VWAP if you're, placing that trade, or make it two times of whatever the average true range is. And I'll show you that in a minute. But um, you want to keep yourself protected. So if you don't keep yourself protected, then it's up to you and your own psychology to keep yourself in check. So, yeah, it made a really nice move. I think these are considered like three black crows here. And then it got down to the lower VWAP. So maybe the lower VWAP is a good target point for this. I did do some reading last night, and the book that I read talked about these Camarilla pivot points, and they talked about, when the sellers and the buyers are establishing, who's in control, that, um, when you're rejecting, then you set your profit target around the other point. So that might be a way to do it. But so yeah, the option's still creeping up in value, and we're getting pretty close to the same amount of profit as we would on the stock, except we're risking a lot less. So let's see where it went to. So yeah, it dropped $1.40, and the option went up like 50 cents. So, I don't know. How do you know like where it's gonna go? Um, Dropped $1.36. So if I had 30 shares of it, I'd make 40 bucks. The option went from $1.25 to $1.72. So is that about the same? Um, but you could trade a lot more contracts of that. If you had 5,000 in capital, you could trade 40 contracts. So 40 times 47, you'd make 1,800 bucks, but your risk is what's important. It's that initial risk. So that's the piece that you want to really be careful about, um, is, managing risk, because if you're wrong, you could be down a lot in a short amount of time. But I thought I was trading live. I wasn't trading live. Now it's getting into this kind of late morning trade, and it's hitting the lower VWAP after rejecting the upper. And so Some of the plays that I talked about previously were like, if you think it's gonna fill in here, you could, take some moves in here, kind of like this morning, how I was playing the level two and noticing where I thought it was trying to move, and then I'd kind of wait for it to pull back, and then I'd take my profit into that direction. And as it got close to the VWAP, you have to know that, like, the VWAP's an area that um, there's going to be a lot of people watching it. If it breaks the VWAP, it's going to go. If it gets close, it's going to reject. There's a lot of resistance here. Um, so yeah, it rejected the VWAP pretty hard. And so that, that's a good thing that, like, if you were going to buy down here and set your profit target here, um, if you're that's the thing where they say like women are better traders than men because men get so into their ego, and I think women are more systematical. And I don't know, how this would apply to anybody that watches the video, but say you're understanding this trade book where it's rejecting the upper VWAP and you want to systematically take profits at the lower, and you're looking at it on the 5 minute chart. Well, maybe what you want to do is just say to yourself, like, okay, I recognize this signal, and what I'm going to do is, once I notice this signal here, whether it's right here or right here or right here, I'm going to go short, and I'm going to set my profit target at that lower VWAP. Fine. Or I'm going to set it at the lower, cam point below the VWAP. Here it rode the VWAP a little bit. And as it established, then your other signal might be like to, once you realize that it's trying to go back up, to go long. And it's opening here, it's coming down here. As it's starting to come back up, you might recognize that right away. But wherever it is that you recognize it, then you want to go long in that direction. But again, the game is to manage your risk, because if you go long and it goes back around, you don't want to be trading such a large size that you can't handle that swing if it comes down and tests it again. So, if you got long here, then, your stop might be down here. And if you're looking at the distance between that and that and that and that, it's about just over 1 to 1. But if what you're doing is you're looking at, how the level two is stacked up and that you think it's going to go up, then you might just look at like, how can I capture a couple cents profit? But if it goes against you, then you don't want to trade such a large size that you can't ride that swing out. And in your head, hey, if it comes back down here, I'm out. But as soon as it starts to move back up, I'm going to just take my profits, or I'm expecting it to fill this gap to the upper VWAP. So if you're so convicted in your trade where you know that in your trade book, when it comes down here, it's going to go to that upper VWAP, what's your risk? I mean, your risk is that it doesn't do that. But if you know that it's going to do that, then all you have to do is buy and set your profit target right there and just wait for it to happen. And don't worry about what it does in between, and just let it take care of itself. Now, yeah, for a stop, you want to put your stop down here. So, if it doesn't work out, that's where the human element comes in, is that, as this setup happens over and over and over and over and over, how do you determine what's the setup that looks like this versus the setup where, you get in a bar earlier and it doesn't work out, right? So I think, this type of pattern is something you want to look at, or this candlestick. But let's talk about this one and then let's shut it off. We recognized it about here. So if we got short at 83 and we put our stop up at 45, that's a healthy amount of risk. I mean, that's about 60 cents in risk. So you don't necessarily know like what the option's going to do. The option's tied to the move of the underlying. It's also tied to the time and the volatility, and the sooner it moves, the better. So if you're right about this move, but it doesn't happen till out here, the option's not going to move very much. So, if you're going to risk 60 cents times 30 shares, that's like 180 bucks, right? Or is it 18 bucks? 18 bucks. So you can definitely handle that amount of risk. And then, if you're setting your profit target down here at 77, you're looking to make a dollar six or so. So you're almost at 2 to 1. You're not quite at 2 to 1, but I wouldn't really, excuse me, look at it that way. I would look at it like it's going to move because it's in your trade book. So you just have to wait for that move to happen and then take your profits. You don't want to play every single one of these like over and over and over. You only want to play the ones that look like this. So how do you decipher these from the ones that aren't these? Well, the thing that I do is I document the chart. So if I end up going and I notice, where I'm, looking at one and it doesn't work out, then what I want to do is study it and try to figure it out. I don't know. The ADX capped out, the MACD was sloping down, the RSI was already turning over. You could pair it with stuff like that. Beyond that, maybe image processing using, something like a convolutional neural network and just cap out that part of the image and say, hey, I've got 50 of these labeled examples that worked out and 20 that didn't. Can you find anything in here between all the data that's on this chart to determine which ones worked to which ones didn't? That might be the way to go. And then, it's going to just decipher that image data. But I got to run. I just wanted to break that down. The main key point I was trying to make is that this $9 in fake profit felt very real. I was very tied to every single move because I thought it was real. And so I took it very seriously. It actually wasn't real. So I just forgot to switch to my real money account. But I'll post the video, and then what I'll do is I'll look at breaking down, these different signals from my trade book inside of the intermediate course for day trading, which is going to just look at, the type of technical signals that you want to look at. And then beyond that, I'll get into what type of signals do you want to look at on a daily basis. But, for the most part, the type of signals are going to be pretty similar, but there are very pattern specific intraday signals that you might want to look at. But, some of the type of setups that involve crossovers and things like that. This is a nice, move up now that it did take the VWAP, so you could go long here. But you just want to be very convicted in the direction that it's going. And I'd say here's the point where you're seeing where it's establishing this bottom on the VWAP. So that's your first entry long, and it filled up to the middle VWAP. If you didn't take that, this doji here, and where it starts to take the moving averages and then takes the moving averages, that's your second entry. And then this golden cross is the confirmation, and then it does take the VWAP. So then maybe you want to profit into this cam point. I don't know where it'll go. Looks like people are already starting to take some profits. Now the option's back to where we got short. Anyway, I want to break down some of these signals, and then I want to break down some more signals that if you're just looking at it longer term, daily, weekly, monthly, how you want to just tweak it a little bit, apply it to options and futures. if you don't know enough about this to even start, then I'll look at breaking down some of the terminology in like a beginner markets class. Day trader beginner, like what's the bid, what's the ask, what are the markets, what are stocks, what are the indexes, stuff that you'd learn like that. And then I'll get into like what type of technical trading signals do you want to look at? How can you apply them to different stocks or options or futures or indexes or whatever? And then if you want to get into this very specific day trading stuff, my hope is to just really break down like what those specific signals are just for day trading. You know, if you just want to look at things intraday. Um, so that's what I got for you. I'm a little sad that I didn't get this with real money. I was really hoping to, but you know, live to see another day. Um, And yeah, that's what I got. These are old positions that I had when I was investing in the CanSlim system, and I tried to close them, and they just don't want to close, and I don't know why. So I have to, you know, figure it out with Interactive Brokers. Why won't they close these stocks? But looks like NVIDIA is trying to go up now. I wouldn't go long right now, but um, so you got kind of the main two signals, you know, this reject here, this play here, some of the plays in between, some of the advanced stuff with the scalping and the level two is what I'll cover in like the advanced course. And then what I'll try to do is get it to where like you start to recognize these signals, you start to take them to where you're really getting consistent with fake money. Now let's do it with real money, but like a super small amount so that it stays the same, which is where I'm at. And once I start to scale that up, I'll just continue to document that inside of that advanced class. So hope that was informative. I'll post it